Good evening, everyone. Hope you're well. Hope you're doing all right. Guys, a revelation that I figured about the trading industry that completely changed the way that I trade and boosted my profitability tremendously is the fact that history repeats itself. And I'm going to use that piece of information to drive more profitability. Just give me 1 second here. Now, the same day that you're living today has already happened somewhere in the past. The world has been going on for a very long time, and therefore, the day that you're living today has already happened somewhere in the past. The government decisions that are being taken today, the interest rates that we have today, the unemployment rates that we have today, the tariffs that Trump is doing, the budget that the UK is doing, everything that you're seeing today has happened somewhere in the past. Now, the great news, why is this so important, is that when it happened in the past, it caused certain market reactions. And then when it happens today again, it causes the same market reactions. I'll give you small examples, and then I want to show you a trade that I had taken just 2 days ago and show you how I used history. It's a live trade that I recorded in real time, and therefore I will show you the history as well of that. In that trade, I speak about history and show you how I used history in order to predict where the market is going. Let's get right into it. So I want to first start with this first example right here. 0% interests plus QE. Somewhere in the past, the USA in that case woke up, the Fed woke up, and decided to lower their interest rates to 0% and start doing something that we call QE, which is quantitative easing. And that has led for the US dollar to melt down for years after it has done it, up until it exited the QE. So from the moment they lowered interest rates to 0%, then did the quantitative easing, the US dollar melted down up until they exited quantitative easing. Right? That happened in that case in 2008, as you guys can see. Now, it also happened in the past. However, I'm starting with 2008. Let's say I see that. I'm like, okay, so when a central bank lowers interest rates to 0%, then does QE, that leads the currency to melt. Okay, good. It happened again. 2014, just a few years after 2008, Europe, ECB, lowers interest rates to 0% and does the QE. What happens? The euro melts through to the downside. Now, if you conveniently missed the 2008 one and then you missed the 2014 one, it happens again and gives you another chance. In 2016, Britain does Brexit. As a result, they want to stimulate the economy, so they lower interest rates to 0% and they do QE. And guess what? That is not the first time this has happened. It already happened in 2014 for the euro, and it already happened in 2008 for the USD, and we've seen how the currency reacted. It went down. So in 2016, when Britain does it, it is only logical to predict that, okay, this will lead for the pound melting down. And as a result, in 2016, boom, the pound melts down. By the way, guys, on all of these different charts, this is the monthly time frame. Right here, the euro melted for 2 years. So for 2 years, all you had to do is wake up and be like, you know what? I'm bearish on the euro because they have 0% interests and they're doing QE, and therefore I'm going to sell the euro. So I'm going to wait for a technical setup, for my technical setup to show up, and then I'm going to sell it. The directional bias is already decided by history. It is not decided technically, it is decided by history. I will give you one more historical example and then I will show you the live trade that I have taken. In the past, I have studied economic cycles, guys, and I realized that throughout time, when inflation goes up and import prices go up with it, the currency of that country in which this is happening weakens. It melts. I've seen it happen multiple times in the past. And then in 2022, the markets gives me a gift, right? It's not really a gift because what I will say right now is sad. However, it's a gift in terms of finances. Now, Russia and Ukraine in 2022, the war starts. And as a result, oil prices shoot through to the upside. As a result of oil prices shooting through to the upside, import prices in the UK shoot through to the upside because the UK is a net importer of oil. And also, as a result of that, inflation shoots up to 10%. I've seen that. That day, I have already seen in the past where inflation shoots up and import prices shoot up. And usually, in the past, that has caused the currency to crash. So in 2022, I make the prediction based on what I've seen in history that, okay, you know what? I believe the pound will crash. So I go to GBP USD and I start selling the pound for the entirety of 2022. And guess what? In 2022 here, for 8 months in 2022, I still remember, more than 8 months. It's like up until, I believe, October or September. GBP USD is just melting down, as you can see from this chart right here. Just melting through to the downside. Alright? Right here, this push through to the upside. I will explain it, then show you my live trade. But before that, let's just speak about this a bit. GBP USD melts down. So for this entire year, all I had to do is be like, okay, I've seen that in history. The same thing will happen again. And therefore, I wake up every day and I'm like, okay, I'm going to sell the pound as I see my technical setup being presented on the charts. Now, right here, by the end of the year, GBP pushes through to the upside. Why? It is because of something that just happened right now, which has already happened in the past. Something that has to do with budgeting. Alright, when the UK takes in tax decisions, for example, to hike taxes and all that, that is usually seen by investors as Britain is being fiscally responsible, which means they are taking the necessary steps towards stabilizing their debt. So it was seen right here as Britain was accumulating a lot of debt this year because they had a lot of expenses. Inflation went through to the upside massively as a result of that. Right here, when they took a decision to nullify another decision that basically cuts taxes, so basically they hiked taxes, that led the pound to push through to the upside right here by the end of 2022. Now let's go to the live trade that I have taken just 2 days ago and see the same thing happening. Let's go do that. Good morning, everyone. Hope you're well. Hope you're doing alright. Guys, I'm buying the pound right now through to the upside for the following reasons. Now, guys, we have a budget meeting incoming in 2 days. And I've already mentioned on X that budget meetings are usually positive for the pound because they signal that the government is taking the right necessary steps towards stabilizing their debt. I've also mentioned on X that the only wrong move that could possibly happen in that budget meeting is if the government decides to raise corporate taxes. Right? In my opinion, that would be a wrong move. Why? Because the labor market is already struggling in Britain. They have a high unemployment rate. And by raising corporate taxes, you squeeze the labor market even more. However, from what we're seeing so far and what we're getting about that budget meeting is that Britain won't be raising corporate taxes and they will instead be raising what we call wealth taxes, which is taxes that are applied to people, for example, that are selling their property or let's say they have a huge savings account, not corporate taxes. That's what's important because corporate taxes, I believe, in my opinion, is the only wrong move in that budget meeting. Therefore, since they will not be raising corporate taxes and instead will be raising wealth taxes, I'm reading this as a positive signal for the pound because it's signaling, as I said in the beginning of this video, that Britain is taking the necessary steps towards stabilizing their debt. Now, what we see right here on the charts, let's get into the technical perspective. We see the market going down and taking out these lows through to the downside, liquidating these lows, which is also a positive signal for the pound right now. We're seeing that through to the upside, the market is leaving a lot of highs right here where stop losses could be lying above them. And therefore, that's another positive signal for the pound. We expect the pound to push up and take out these stop losses and reach up into this high right here and take it out. That's why my target is there. Now, going down to the TET Capital report here, we can see that Britain, right here, the pound, is bullish on the investor horizon. It is bullish on the day trading horizon. And therefore, we're seeing bullish signals for GBP USD right now, and that's what's incentivizing me even more to basically go ahead and buy GBP USD. Let's wait and see how that goes. So, there we go, guys. Pound rocked and through to the upside after the budget meeting. How did I know that? Am I so intelligent? I just study a lot. That's it. That same day happened in the past. That same year happened in the past. Look at this. Pound melting down for a significant portion of time because of their tremendous debt. And then boom, tax hike pushed through to the upside. Let's go to 2022. Pound melting down for a significant portion of time due to the tremendous debt that they're having. Then boom, tax hike. Pound pushed through to the upside. That same year happened in the past. That's why history is so important, guys. That's why fundamental analysis is so important. A lot of you guys only rely on technical analysis. Fundamental analysis is so important because the same day that you are living today, the same day that you will live tomorrow and the day after has happened in the past. And therefore, if you can find that same day in the past and find how the market reacted to it previously, you will find the next market reaction. That's why history and that's why fundamentals are so important. And therefore, for today's lesson, a revelation that completely changed the way that I trade, which is history repeats all over again. The day that you are living today has already happened in the past, and the way people reacted to that day in the past will be the same way people react to that day today. That's it. And if you study that, you'll increase your profitability phenomenally. Now, one more thing that I would like to say, which is a small exercise that I do. Every Sunday, guys, I sit there, I choose a random year, a random instrument. That's it. I go to a random year, for example, 2022 GBP USD. All right, what happened with GBP USD? What were the circumstances surrounding it? What caused it? What was the unemployment rate? What was the inflation rate? How did the GDP grow during that year? What happened with that instrument? What were the circumstances surrounding it? And how did that currency behave as a result of those circumstances and those events? And just I would study it, just that, and write it down. And then I would understand the history. And then when those same days, same circumstances resurface in the future, guess what? I've already studied that. I know how the market will react. Or let's say it doesn't always react the same way. Let's say I know up to an 80%, 70% accuracy how the market will react to certain events. So I go ahead, wait for my technical setup, as you've seen in that trade right here. I waited for the market to liquidate some lows right here and then reverse and targeted some highs through to the upside. And then I trade my technical setup in that direction. So the fundamentals, the history, give me direction. And then I just wait for my technical setup to show up and I trade in that direction. As simple as that. That is the revelation that I wanted to share with you guys today. And I'll talk to you again soon. Goodbye, guys.